Okay, we have our panel now, which is the business of identity. So we've seen from the last two presentations, we have financial services organizations talking about why they think their position in the digital identity field is one that is a good idea for them. So what we're going to do on this panel is talk about what some of the challenges are and what some of the benefits are. So I'm going to ask our panelists to come to the stage, if possible, please. And I'm going to hand over to Marc Hochstien from American Banker.
Thanks, Emma. Thanks, everyone, for joining us this afternoon. My name is Marc Hochstien. I'm the editor-in-chief at American Banker, the daily Bible for the financial services industry. I'm going to ask each of the panelists to briefly introduce themselves, and then we're going to jump right into the conversation. So to my direct left, it should be working.
All right, hello, yes. Yes, so I'm with SecureKey. We are a Toronto-based company. You might have seen our name earlier on Christine's slide. We are currently in Canada. We're operating a federated authentication network known as SecureKey Concierge, where the Canadians can actually use your bank credentials to access online services. And we are also in the process of launching a new federated identity service.
And just reintroduce yourselves, Christine and Dan.
Christine Robson. I'm with Deloitte Canada, and I lead a lot of the work that Deloitte does around digital identity. I recently spent a year at the World Economic Forum working on the Blueprint for Digital Identity project that we did there.
And I'm Dan Johnson. I'm the head of digital identity at HSBC.
Dan and Christine and Matt did such a wonderful job answering a lot of the questions that I had brainstormed for this session. So I want to try and build on some of the stuff that was discussed earlier. You know, one thing that I wonder, given how heavily regulated financial services is, and given how, in many ways, conservative and risk-averse the banking industry is, you know, because the case for bank ID is very lucid and very clear and very compelling. But given that what we're talking about is essentially a non-financial product, how does this concept, you know, that at least appears to be very much outside the scope of what we usually think of banks doing, you know, what kind of a sell is this with management, with boards of directors, with regulators? If you say, you know, we're in the business of making loans and taking deposits, and now we're going to become a digital ID company. I'd love to hear the thoughts from everyone on the panel. Maybe Christine, if you want to start.
It is a great question. I think it's a conversation that has happened in many boardrooms around the world. So I think I would start by saying identity is critical to the business of a financial institution. In order to deliver the services and the products you do, you have to have identity built in. And so identity is incredibly central to us, and therefore we in many ways feel like we must own the identity process. And then from there, I say, you know, look around the world at identity systems that are gaining traction, and a lot of the ones that you'll see might be social logins like Facebook. They may be things like Google. And you say these are actually gaining user adoption. Why? It's because they're convenient. It's because they're easy to use. It's because they solve a lot of the problems that users currently have with identity. And so these systems are gaining traction, and user adoption really does drive what I think financial institutions in many ways are willing to consider. And so if you consider those two factors, that identity is being done by somebody, and in many places it's being done by non-banks, you combine that with how important identity is to financial institutions as a whole, it's something you sort of can't afford to be left behind on.
So a key thing really, I think, is re-intermediation. So there's this constant threat of disintermediation of banks. So, you know, we have peer-to-peer payments, And there's this kind of underlying worry, really, that banks are going to be, really left out of the process. So, if you're interacting with apps and none of those apps are your bank, then what role does the bank have to play apart from kind of processing bulk transactions under the covers? So providing identity services in addition to financial services kind of gives that opportunity to be re-intermediated back into the process. I think it's a fair question. It's a hard sell, particularly from institutions that have spent a lot of time really just concentrating on financial services. But I think, as was kind of clear in the World Economic Forum report, that identity is key and is really, really important, and potentially provides a whole new way of interacting with customers.
Lynn, how did, because I mean, Canada is one of the success stories that gets trotted out when people talk about, some kind of a bank-led ID scheme. What got the banks on board in Canada?
Well, today when we're listening to what Christine and what Dan had mentioned, in general, as a consumer, for me, we trust our banks. Right? We trust our bank. We tend, because the bank have our money, so we tend to be more cautious careful with how we use the identity. So it started out with that. It's a trust. It's also a high velocity in the sense that we log into our banks more often. Our bank accounts versus on something that you don't get into often, you tend to forget. And it's also, as I think Matt from Capital One and others have mentioned, that the bank is also highly regulated. So this is perhaps an entity where you also, when you vet your identity for the first time, you vetted it online, in person. So this is where all these a factor that we trust our bank, and when we were putting this service together for Canada for SecureKey Concierge, the bank was a natural choice to be that partners that to use the bank credentials to access online services.
Why did the banks themselves want to participate? What was in it for them, and what got them sold on this, thinking, yeah, we got to do this?
Oh, absolutely. I think this was a question some of the panelists also asked earlier. So for a couple of reasons. For the banks, the number one, I think there's probably three reasons that we think about. First is that the bank want to be able to re-intermediate with the customers. Right? So I think earlier Kristen mentioned there are other disruptive model out there that might push the bank out of the equation, where identity is going to become a sticking point for the bank to remain relevant to their consumer. So that's point number one. Point number two, for identity as a service, is also going to create a new revenue stream for the bank when they operate as an identity provider. And thirdly, it also helps to improve efficiencies as the bank can also use the identity services for themselves internally, whether to reduce some of the inefficiencies internally as well as with the customer. So that I think for those 3 points, the bank is very much say, yes, I want to be a part of this ecosystem.
And a common theme in this whole track has been the L word, liability, and. Can you talk a little bit about how in Canada, in the SecureKey scheme, the question of liability to the banks was resolved?
Absolutely. So in Canada, when we for SecureKey Concierge, it's a very I would say simple, but today the liability model is zero liability. So essentially, what we expect each of the party in playing in the ecosystem to have a good faith effort to run the service as they would run it on their own. So within Canada, there's a document we call the trust framework, when it essentially outlined the how each party would operate this SecureKey Concierge platform. So from what we're running today, the liability is there's zero liability in Canada.
Dan, something you mentioned in your presentation earlier was, that regulators have got to get behind this for digital ID to really take off. Can you talk a little bit more about that? And when you talk about regulation, are we talking about anti-money laundering regulation? Are we talking about data privacy regulation? Flesh that out a little bit.
So really, we're talking about all of them. So crucially is anti-money laundering legislation and also regulation. So at the moment, there are significant burdens put on the financial institutions to check paper-based documents, also do face-to-face checks, and all of those are kind of prescribed really in the Joint Money Laundering Steering Committee guidance and in other interpretations of anti-money laundering legislation. Those legislations and regulations are in the process of being changed, but it's a really kind of slow process. And needs to, in order to kind of really catalyze the digital identity opportunities, that really needs to speed up. And the only way that's really going to speed up is with financial institutions and other institutions really helping the regulators to understand what is it that we want to do with this information, how are we going to want to use it, and then creating appropriate checks and balances in order to make sure that we're using that information correctly.
You know, I gotta wonder, given all the various things that drive AML regulation, you know, all the terrible things that happen in the world that have led to this albatross that's around the neck of the industry. You know, globally, how realistic is it that those kind of regulatory changes are going to happen? Christine, what is this? Is this a realistic goal to pursue?
Yes, I believe it is. I think if you look at regulatory regimes around the world, they are changing. I think that in many countries, not all, you are seeing that regulators are, over the past, I would say 2 to 3 years, demonstrating a lot more willingness to collaborate with incumbents, to work with the industry and provide opportunities for innovation to happen. So, you look at the Financial Conduct Authority in the UK, if you look at regulators in Canada, regulators in Australia, they're actually being very proactive at industry engagement. They're setting up structures such as industry or sandboxes. So, and definitely having that view of collaborating with the industry to build understanding, and also building spaces where companies can innovate, can experiment with relatively little downside. And so I think it does vary country by country, and some countries have regulators who are, I think, for very valid reasons, less willing to allow that kind of experimentation. But I think you also see many jurisdictions that are looking to build the fintech sector, looking to build themselves up as innovation hubs, and they are creating the right structures and the right processes where companies feel like they can do those things.
Lynn, do you have any additional thoughts?
I would echo what Christine shared. I mean, for us at SecureKey, we are also very actively working with different standards body, with the government for sure that we do believe that this is coming, and it's coming in a big way.
What are some of the other challenges that the industry is going to face to build this kind of ecosystem that we're describing here? Dan?
So in addition to the L word, which I think we've done now,
Yes.
so there's two other kind of elephants in the room, really, as far as identity is concerned, really. So one of them, and for me the most important one, is consumer trust. So we've all got to, if we believe in this identity solution or identity requirement, then we've all got to create our identities or have our identities created for us, and then trust that that's going to be used appropriately. So improving customer confidence is absolutely crucial and really, really important. It's probably not the right thing for me to do to tell you all about improving customer confidence, because you're all identity professionals and you kind of understand and get this. I'm talking about people who aren't in this room. The people who are interacting with their banks, with the government, with online payment services, and so on. It's them that we really need to convince that the way that we're going to be treating their data, the way that they're going to, the organizations are going to be consuming and using that information, that's where there needs to be a huge amount of work on improving that customer confidence. So that's elephant number one. Elephant number two is the commercial model. So how is this actually going to work? Is this going to be that the identity providers get paid at the time that they create an identity, and then that identity can be used by everybody and anybody anytime that they like? Is it going to be done on a transactional basis? Is it going to be done on a license basis? Do you pay each time you create an identity, and then every time you use it at a reduced rate? All of those questions, so that whole commercial model really needs to be, really also needs to be solved. So three elephants in total: liability, commercial model, and the other one that I listed. Customer experience, the important one. Yeah. Thank you.
Christine, what, in your observation, are some of the most viable revenue models that have been tried so far? And are there any promising ones that have yet to be tried?
So there are a variety that exist. I think there are some identity systems that are government sponsored, so free for everybody who is part of those, free for users. I think the free for users theme is one that we do hear a lot. There are also a lot of models that are transaction based. You pay per transaction. I think those are all viable. I think an interesting conversation I had with someone from a European bank who implemented a system like this not so long ago. I was asking her about revenue models, and she said that when they went into the identity system there, and they didn't even consider the revenue model. They said, this is something that we have to do, so let's do it, and then we'll figure out the business case later. So they really went into it with no business case, but just a very, I think they felt it was a burning platform, and they would charge ahead and figure out the details like the L word and the R word revenue
very
afterwards.
Silicon Valley.
This is a global bank, so they definitely felt that it was a important strategic priority, I'll say.
In Canada, what's the revenue model then?
Well, for us, we see, I guess our view, we see there's two business model. One is the destination, which is the relying party in this case, would pay for enrolling the consumer for whatever the services that is. I think it create a frictionless experience, and over in the long term, they also see a lower cost of onboarding the particular customer. I think the second model, which is whether you're going to ask the consumer to pay, but in general, consumer don't like to pay, right? You just, you see that with, for example, I think earlier some gentleman asked about social login. Facebook is a social login, you don't pay, but actually you do, there's advertising and your data is being monetized. So
you're the product. In
yeah,
Facebook.
exactly. So I think for us, it's the destination pay, and it could be a transactional model. So that's what we have seen so far.
Dan, you got some additional thoughts?
If I can just pick up on that. So having identity as a consumer for free, actually, an even better model is where consumers can make money out of sharing their data. So there are a number of organizations in the world currently that make money from people sharing their data, but the customer, the individual, doesn't actually get to make any of that money. It doesn't necessarily mean that customers will get paid cash for their attributes and also for their data, although that's conceivable, but actually could possibly end up with better services or cheaper services. So for example, if it would be beneficial for a bank to have access to your location information, so admittedly that sounds a little bit creepy, but if we think about kind of why. So some of us have traveled here from overseas. You will have used your payments cards in order to jump in a taxi or to pay for dinner or whatever. And some of you will have had a call from your bank because that's not consistent with your normal behavior, because the bank doesn't know you're here. So they just want to check that you are. If the bank had access to your location information, then actually they could let that cardholder present transaction go through, and potentially also then block all of your cardholder present transactions in your home country, because they know that they know you're not there. So as a reward for providing that information to your bank, the bank could potentially offer cheaper services to you because of the reduction in cost in fraud detection and fraud prevention. So that's kind of one little tiny example of how customers could actually benefit financially from sharing data, both attributes and identity.
So I'm going to open it up to questions in a minute, but at the risk of clearing the room, I want to ask about blockchain. So last week, American Banker had a conference in New York. It was our blockchain conference, and on the panel of bankers, of like people from large financial institutions that have been trying out this technology for various use cases. One banker from BNP Paribas brought up self-sovereign identity, and not to be outdone, the representative from JP Morgan said, speaking for herself, that she believes self-sovereign identity to be the killer app for blockchain. So I'd just like to get some thoughts from this panel. Number one, about the applicability of distributed ledger for creating the kind of better identity system that we all want. And number two, just the whole notion of self-sovereign identity. You want to start, Christine? Everyone's passing the mic to each other.
We don't want to help you to clear the room. So Deloitte and the World Economic Forum also did a lot of work on blockchain, and I think that blockchain is a great tool that should be used to solve certain problems. I think to a man with a hammer, everything looks like a nail. To a man with a blockchain, everything looks like a blockchain problem. And so I think the important thing that has to be done with blockchain is figuring out what are the nails and what are the screws, or whatever other metaphor you want to use. So definitely a useful tool that can be used for identity, and I know there are folks who can speak to that much more knowledgeably than I can. Definitely a useful tool. Identity is a possible use case. I don't think that it is the only way that identity can be done, and so I think it's important not to get too caught up in the excitement about blockchain and forget that there are other ways of doing identity, and it's very situational. In some cases, blockchain maybe is the right way. In some places, maybe it's not the right way. Sufficiently ambivalent for everyone?
So for SecureKey, we are launching our federated identity platform based on blockchain. And based on our experience and what we are trying to do, we found that blockchain helped to solve a couple of key, I would say, issues for us. One, the first thing is related to what we call triple privacy protections, where a destination does not know where the transaction come in from, and vice versa. And then the ecosystem does not. So the enhanced privacy is very important as we launch this identity platform. So that's one reason is triple privacy. The second one is integrity, where we can see that the service provider knows where the data come from and know the individual that is providing it. So that's the integrity is also important to us. And the third thing is related to resiliency, where each of the endpoints kind of run its own node, so it kind of prevent any kind of denial of service attack. So we picked blockchain because it helps to satisfy these critical technical requirements, and as well as the policy requirements that we have.
Dan, any thoughts on blockchain and self-sovereign identity?
Yeah. So for me, and this is kind of more of my own personal opinion as opposed to HSBC's. It's kind of challenging to find a compelling reason for using blockchain as a specific technology in the identity space, as a number of the issues can be solved through kind of more mature technologies. I think it's definitely an evolving space. We're definitely investing quite heavily in that space. I think, kind of as Christine was saying, that there's lots that you can do with blockchain as an asset transfer mechanism, as a kind of immutable ledger. It's very interesting and it's very powerful. In the identity space, I think it's just not really that clear right now as to exactly where and how blockchain should be used. Although, obviously, I'm spending a fair bit of time with SecureKey, kind of understanding the latest developments in that space.
Questions from the audience?
limited time, so I'll come around to you all.
Back to the customer trust issue, speaking to the, let's say, the average Joe, how do you think they will can get to have an intelligent view of embracing a digital identity solution when a lot of them probably don't even understand the privacy settings on Facebook?
Great question.
So I think the key thing, or certainly the catalyst, is really going to be making it compelling and interesting for consumers. So there are social media connect platforms where customers just give their data. And they're doing that really because they're not really that bothered about the data. So for example, if it's a social media account and that social media account gets hacked, they'll just close the account and open a new one. It doesn't really matter. They may lose some connections with some friends, but they can get them back again. But they haven't really lost any money. They haven't lost their house. They haven't lost anything kind of physical. So really, the key, I think, to making it interesting and compelling and increasing trust is to make the service usable and do it in such a way where people want to, can't really see a way of interacting other than through digital identity. So I think there's kind of some compelling use cases that need to be created and presented, and then off the back of that, some work to kind of improve trust off the back of those use cases.
You, Christine, and I'm interested, I know you worked on the World Economic Forum report, and what I'm interested in is hearing the international aspects. How important is this that we have an international community, an international standard around getting identity done? Is it okay if every country does its own thing and it will be able to intersect later, or is it important that we kind of coordinate from the outset so we get one global mechanism for doing transactions across borders and within country?
It's a great question. In the report, we advocated for a bottom-up approach. I have the belief that if you try to implement a system for the world and push that from the top down, something will go wrong. And identity is very cultural. It is one size fits all, and something that works in Canada will not work in Singapore, and something that works in Israel will not work in Turkey, for example. And so I think that it definitely has to be a bottom-up solution where you allow the different countries or different jurisdictions to build something that works for them, whether that's a nation state like Singapore, whether that's the EU. Let those systems grow in the way that works for the users they're trying to cover. That being said, ultimately you do have to build with interoperability in mind, or else you'll end up with puzzle pieces that just don't fit together or require a lot of additional connecting pieces to fit together. And so I guess my answer to your question is sort of both. I do believe bottom-up is very important, but you do have to have the view of open standards in mind to end up with something that does work cross-border.
Yeah, maybe just to follow on, Dan, just thinking of from HSBC's point of view, I know you're working in many countries around the world, and AML is globals too. And so this problem that you don't really want to try to figure out country by country, you really want to get to something that's more consistent. Can you just speak about that portion of it?
Yeah, I agree with Christine really that it's going to be particularly challenging to come up with a solution that the kind of one-size-fits-all solution. I think the key thing is really interoperability. There have been tens of millions of dollars spent in each nation coming up with identity schemes. I don't think that there is a huge appetite to then change those national identity schemes in order to comply with a single unified global scheme. So the key thing is really kind of coming up with the protocols and the standards and the rails against which national identity schemes and attribute exchange mechanisms are going to work, rather than try and re-engineer those existing schemes.
Hey, I just wanted to touch on this self-sovereign identity piece because I didn't really hear anyone answer that. And from Capital One's perspective, we're very much stewards of our customers' identity information. Much like we don't own the assets that they bank with us, we don't view the PII that a customer banks with us when they're establishing a banking relationship as something that we own. It's something that we can protect and transact, much like we do the customer's money. And when customers trust us to share their identity information with the same level of scrutiny that we put on sharing their money, I think that there'll be a big win for financial services in building digital identity.
Just to add to that point in terms of the idea of a self-sovereign identity, in my opinion, identity isn't something you can claim yourself. It's what someone else can vouch on your behalf. There are things that you are, but for the most part, for transactions to happen, someone else needs to be the broker of trust. And as you're saying, Matt, you know, they in this case, you're the custodian, you broker that trust, and the customer enables you to transact on their behalf. I think that's the most likely model to evolve, blockchain or not. So in a way, I feel like by implication, the most likely scenario is that an identity will be a composite of different brokers that vouch for specific levels of trust.
I think if I can just pick up on that, there's the first element really in the creation of identity is really self-assertion. So you do need to be able to say, this is me, and then have that information validated by external bodies. So for example, you know, my mom and dad, they named me, and for a few days, nobody knew what my name was. Actually, my parents, I don't really knew what my name was until they decided, and then they went and registered my name. So they asserted that, and I probably would have done myself if I could speak, but they asserted that that was my name and that that was my date of birth, and that then was recorded, and then that's used, so that's my birth certificate, and that then gets used to help to validate that I am really who I say I am. So there's an element of self-assertion first, and then validation of that self-assertion. And that comes back to a question earlier, that there are people that don't have documentary evidence that supports their identity. So they, you know, they just exist. Their family, their friends know about them, but there's nothing written down. There are no records. So they have to be able to self-assert their identity and then have other people say, yeah, that's Bob.
Picking up on the point about self-sovereign identity, I have to say I'm not really sold on the concept of self-sovereign identity. I think as a previous speaker mentioned, I think it might have been Dan, the role of the public sector in encouraging uptake of these solutions, I think, is extremely important. And then one of the questions that you asked, Mark, about the elephant in the room, for me, you know, what happens when something goes wrong is an elephant in the room, because I think, you know, eventually there will be an identity system failure, and there will be the question of, okay, so what do we do in that case? And I think recourse is extremely important if you look at the situation where an identity system does have a failure of some kind. In self-sovereign identity, you may not necessarily have recourse, and I think especially if you looked at you know, unbanked populations or people in the developed world, having recourse is extremely important when you really have no other source of proving that you are who you say you are. And you know, if you look at you know, people say self-sovereign identity is an identity that you control yourself. I mean, I think, what does ownership of identity really mean? What does control of identity really mean? I mean, if I have my identity held at a place like a Capital One, and I have control over, you know, when and where and how it's used, I think that is a high degree of user control. And so I don't see the value of self-sovereign as being that much greater, really, or greater at all.
Hi. So I have a question about how you see relying parties adopting using financial services as an identity provider, in the sense that, you know, what the journey looks like. If I'm going to use financial services and I'm using one organization, how do I deal with the rest of my clients, my customers that don't partake in that? So, you know, ultimately I would like to have my identity provider take over that for me, right? But if I have to have my own systems because all of my consumers or my customers aren't served by that one entity, I mean, do you see what I'm saying? Like, how would they adopt using financial services ultimately if they don't have full coverage for their user base?
It's a really good question. So I think really we have to look back at the card payments industry, which is why I kind of illustrated it earlier. So as I said before, the card payments industry really, so I think Bank of America was the first card. And that could only be used in limited locations, and it could only be used through that one organization. So it was really quite limited. But it was so compelling and so interesting that customers really wanted it, and they wanted to be able to use it in lots of different places. So it then became into ultimately into Visa, but became something that customers just really wanted to, and that provided the impetus really for organizations to adopt and to consume that information. I think the same thing is required in the identity space. So at the moment, there isn't really that kind of catalyst. There isn't yet that catalyst of creating a compelling user journey for consumers that really, really want to be able to share their identity. And it'll become very similar to social networking connect facilities, where people will just want it and not go to services and sites and organizations that don't have that capability.
Thank you. Let me extend that last question a little bit. Canadians are very nice people. It's very nice all the banks get together and work in a common way. However, other parts of the world are probably not going to be like that. In addition, we have MNOs that are trying to play in this space, some technology companies that want to play in the space. Can you talk a little bit, any of you, about how you see the competitive environment evolving here? Are we going to see bank consortia competing against each other to deliver identity services, competing with MNOs to deliver different types of identity services? Is this all going to be a big collaboration, or are we going to see some competition in this?
That's a great question. From our perspective, based on our experience with Canada, we believe that this is not a single player. This should be an ecosystem where the MNO, the credit bureaus, the banks, the utility company, like all of us have to work together, and not any single one entity can pull this thing off by themselves. That's probably a SecureKey's view.
I'll give the classic consulting answer, which is that it depends. I think, as you say, Canadians are nice people. We like to work together, and we can build consortia, just like that. It's no problem at all. I'm sure our folks from SecureKey would agree. It was just, a walk in the park. I think if you look at other markets, though, you will see, I believe, places where you'll have one person or one entity that tries to fill the whole market. Maybe they're the one who takes those first steps, and everyone else figures they have to either get out of the way or jump on. So it will be a consortium, but not a sort of equal players consortium. I think there are also markets where you also wouldn't necessarily have sort of antitrust concerns that we would have in North America or in Europe, where you might see one provider being the identity provider for the whole region, jurisdiction, whatever it is. That would be more similar to some of the government-led solutions we would see, for instance, in Estonia. That's a single player, that's a monopoly identity market. Then I think in other places, you will see more competition between different providers who see identity as being a competitive advantage as opposed to something they should be working together on for the benefit of the industry. So I think it depends, and I look forward to watching that play out in different markets.
I see a kind of a very vibrant market in the identity space in the future. There is an awful lot of data that is currently collected about us, but actually would be really helpful if we could kind of control and manage that data, and then have that data shared with our consent under a set of standards and rules to organizations. And those attributes, that data and that identity, needs to be validated and correlated with lots of other data sources. I can see a role for lots and lots of organizations all contributing into this validation of data and the provision of data, and then also the sharing of data. I do think there is going to be an element of competition in the same way as there is in the cards payments industry. So we have Visa, MasterCard, and Amex, which are broadly interoperable, actually, and also, they have created interoperable standards. So, nobody needs to really understand the trustworthiness of the card issuer, for example, in that payments transaction. because the scheme kind of works. So the key thing is really kind of getting the scheme right, or a handful of schemes, and then allowing for the growth of a market to then provide data and attestations of that data in that market.
I don't know how to put this question, so I'll just start talking. How's that? One of the interesting things about the presentations here and discussions around risk and liability is that most of the value proposition being presented, and it's not this presentation in particular, it's all about efficiency gains and fraud prevention, mitigation of losses. It's not a value proposition in a positive value proposition sense, right? It's basically cutting the losses, reducing fraud. But all the benefits usually are stated as individual benefits. So the person gets to do something they couldn't do before. So it's institutional risk as the motivator to do it, and then a big gap, and then somehow ends up in personal benefit. What are your thoughts on competing with the US identity verifiers? So let's say LexisNexis, who does data collection and then creates probability profiles to identify people. Maybe that's where the money is to be made, is reduction of risk for the business, not the identity provider reduction of risk. Did that make any sense at all? So instead of looking for the financial sector to reduce the risk by better identity, right? Why not look at the small business who relies on the person they're doing business with to be the real person, right? Just like in the payments system. Why not look at their cost reductions because they get cheaper, faster, verified identities, which currently they buy from knowledge-based authentication providers at high cost and low certainty. Like, wouldn't that be a valid case to do identities? I'm going to stop talking as I dig the hole deeper.
Okay, I'll try and answer that. I think there was a question in there. So, actually, I don't know that I can answer that now. I'm sorry. What I was going to say has gone completely out of my mind.
So I'll give a brief plug for the report that I wrote at the World Economic Forum. I think in that report we laid out that we believe there are a range of benefits for all stakeholders. So certainly all the things you just described I think are absolutely true. So there's the efficiency case, the cost reduction case for the bank. There's the benefit for the bank. There is efficiency and cost reduction for the relying parties. There's benefit for the relying parties, and there's both cost reduction and benefit for the users as well. I think they all exist in a system that is done right and implemented properly. I tend to talk about the business case for the banks because those are sort of the folks I speak to in my day-to-day life as a financial services consultant. I think it's important, when you look at the folks that we want to drive these systems and put it in the terms that matter to them. So, my clients will say, what's the business case? What's the business case? And so I say, well, this is the business case. But I firmly believe that when done right, these systems bring benefits for everybody. And also, it's both incremental benefit, but also risk reduction for all parties.
I think we just have one more question.
Maybe it's a little bit related. Something that Dan brought up about, so when I think about identity, it's like I want to protect myself. I don't want to get, someone to hack me or get my account. But to your point about, realizing that my digital identity, my digital data has value, are you hearing customers actually start talking about wanting that control over who gets to know what about me? Because I see as we have one digital identity, now everything I put on Facebook, now my financial institution will know about, right? So as a customer, how do I, I would want to have control over that. Are you hearing other people asking for that too?
More than just you? Yes, yeah. It certainly resonates. And it's becoming more and more important, really, in people's lives that they do have that kind of control. Also, kind of recognizing that although you might, in one implementation, you may have one digital identity, and then you control access to consuming organizations or relying parties of that identity, you'll still have multiple personas. So the things that I post on social media accounts is not affiliated with my company. And although I do need to be fairly careful about what I post on social media, as I'm contractually obliged to be sensible and careful, that I have a different persona. You know, I do different things. I have kind of my family life and my own personal life, and that's what I kind of post there. And my bank doesn't really need to know about that, and I don't really, especially withholding it, but I don't want them to know about that kind of stuff. Equally, I don't really want the government to understand, you know, kind of what's going on in my bank account, or also what I'm doing online either. You know, they don't need to know that unless I can see that there is a need. You know, maybe sharing my my social media or sharing my location will help with my travel insurance, and I can get cheaper, better, more specific or time-bound travel insurance as a result of kind of sharing my location or sharing that kind of information. So I think if there's value for me, then I'll share the information, and if there isn't, then I won't. And I need to be able to trust that that information isn't going to be snoopable. So Greg Wolfond, actually, from SecureKey, talks about this concept of honest but curious. You know, so you have people who could have access to the data, but don't. But then, you know, maybe just kind of have a look. I want to make sure, in this whole kind of customer confidence sense, that organizations are not going to be able to get hold of that data unless I specifically want them to. And that is becoming. That kind of message is coming out now with the way that people are interacting. I think we've got to this point now where it became the norm to just share everything. And now we're starting to see, and consumers are starting to recognize that actually they don't want to share everything. They only want to share very specific pieces of information for specific periods of time to specific organizations, and they want to know that that data is going to be held or accessed by that organization only, and not then transmitted on to other organizations.
Actually, before we wrap it up, I'd actually like to hear with Christine and Lynn. Like, do you see signs of this, that like consumers really are asking for this, for the control, this kind of control?
I think so. I think there are positive signs. I don't think we would come to the point where there'd be a crowd out in the street saying we want digital identity, we want it now. But I think that, as Dan said, people are getting much more aware of the value of their personal data and all the value that we have given away over the past 5 to 10 years, because we just didn't understand what that would mean for us. And I mean, personal identity is a very different asset from money, in that once it's out there, you can't really pull it back, you can't really replace it. It is unique to you, and it can't be recalled. So I think that we will see the desire from customers to have more control and have more understanding build over time. I think that is building over time. Again, I don't think they're going to be out enforcing, bring us digital identity, but I think you do see that dissatisfaction, and increasingly people are wondering, you know, why do you need to know all these things about me? It seems like you're asking for too much. So maybe not sort of a clear call for the solutions that we're advocating, but definitely I think dissatisfaction with the status quo is coming out.
I would echo what Christine said, and you know, with regards to, do we see that consumer really want a digital identity? Absolutely. In addition to financial services, I also work with the healthcare sector, and this is very important, as well as getting access to online, you know, portal for medical records, be able to onboard the customer, then they actually can decide what information they can share with the physician or home health provider, et cetera. So we definitely see a trend of people wanting to control, and also to be able to share, decided what they would like to share within what circumstances. So that is definitely coming from what we've seen. Yeah.
That's very encouraging. I hope it continues. Well, thanks to the panelists. Great discussion. Thanks to everyone for the great questions. I think we are out of time. So